Hey everyone, it is Evan here from the Trade Risk on Tuesday, February 19th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So this can be a short video here. Not a lot has changed. We did our usual, weekend video on Friday. Markets were closed yesterday on Monday, so it was just today's action. It was a pretty quiet day, so frankly, there's not a whole lot of new information to discuss. Kind of all of the topics that we mentioned on Friday are pretty much still in play. All the levels that we talked about and sort of the thought process. You can see today on Tuesday, it was basically a mildly green day, mostly flat-ish right across the board. We are still holding some good numbers over the past 5-day performance. We still have energy materials on top leading. We got USO now climbing to the very front of the list for major markets, and we have volatility, which continues to unwind. So if we jump into the charts here and take a quick look at what's going on, the weekly chart, you can see we are off to a positive note to the week. We are exceeding last week's highs, and we are on the road to 2,800 in the S&P 500. That was the big relevant level that we've been mentioning for the past couple of weeks to the upside. Not a prediction that we were going to get there, but just as an observation that it was a very meaningful sort of level to test and to feel out how the market acts at this area where we topped out from in the fourth quarter of 2018. We're very much right there right now. 27.85 is how we closed today, so we're about 15 handles away from that. Could happen tomorrow or this week, and we will be paying attention to see how the market reacts there. It is at this point now up 8 out of the last 9 weeks in essentially a straight line from the lows of December the 24th. So it'll be interesting to see how it can act up there as it continues to stretch up and face some fairly stiff resistance. If we go down to the daily chart here, you can see just a little more clear. The trend continues to be to the upside here after breaking out from the little 2.5-day pullback that we saw on the 6th, 7th, and 8th of February. We exceeded those highs and started to trend up towards this 2,800 level over the course of last week and now into this week. So on the upside, 2,800, that's what I'd be paying attention to. For a very micro short-term level, Thursday's lows of last Thursday, the 14th, that's a decent reference point to use. That's 27.31. And then we have all the way down here around 26.90, 26.80 or so. That would be this prior consolidation that we found resistance at for a couple of weeks and then broke out and retested right around that 2680 area, and then the very big, more influential kind of 2600 on the downside. So lots of little layers to kind of pay attention to, measure risk against, and basically measure the strength of the trend on the downside. And then on the upside, we have 2800, and then way above that, 2872, a nice little air pocket all the way up to where really the market started to accelerate lower way back on October the 10th when we had this sharp 3.3% down session. That comes all the way up around 2872, and then all-time highs. That's essentially what's above us right now. And just to give you a little reference of how far we are from all-time highs, it's just about 5% now. With the way this market's been going, it could happen very soon. But again, we know the risks of chasing an extended market, so caution is certainly advised as we come back in to this 2800 area. So that is the S&P 500. IWM, really not a whole lot new to say about it. It's essentially, same comments from last week. We're coming back into the December top end of the range here, but we are kind of decisively charging ahead with Russell 2000, the small caps leading. That's always encouraging to see. And the NASDAQ 100, kind of a similar situation here, coming back into all of this prior resistance inflection points, points at which the market kind of topped out from in the fourth quarter of 2018. So we'll see how the Qs handle this area. So far, if the Russell is the leader and going to be the barometer for the rest of the market, it is interesting to watch here as this starts to slice through and take out this certainly the December rollover pivot here as we get the MACD that continues to push to new highs. The most interesting thing so far this week is going to come from energies and commodities. TLT here, also interesting, but not the move today. The move today is slightly higher here, but you can see we talked about this range that it's been carving out, and we're inching back up to resistance. This is long-term resistance here. This was basically the highs for all of 2018, minus the slight breakdown in early first week of January. But really, TLT has stumbled around this 123 area for the past 12 months, and we are back to it now, testing it. So this is going to be an interesting level to watch. Do we see some acceleration and breakout higher? That means rates coming back down or continuing to fall lower, or is it going to be some type of big reversal and we kind of fade back lower and we start to see those rates rising again? Certainly something to pay attention to. Oil is interesting here this week as it continues to move higher. It's moving away from this consolidation. This trend in the short term is continuing higher here. So the big retracement or the big downfall that we saw October, November, December, starting to put in a more meaningful kind of second leg higher here in its retracement. The next big levels to pay attention to, big level would be around $13 in USO, but before that we have about 12.25. That's where we topped out, consolidated a bit right around Thanksgiving time. If we go to natural gas here, you can see this is also trying to stabilize here. Again, it's been in the penalty box because it's been making those near year-to-date lows, but it is trying to stabilize here at this 23 area. Had a nice 1.37% pop. My same thoughts are basically still here and apply. A fast and sharp move back over 24.50 or so, $25 plus. That's what starts to look more interesting here on the long side for natural gas. Until and if it can do that, I do want to be careful here and favor the downtrend that we see in natural gas. If we go finally to metals, which is really kind of the star move for today, 1.5%, nice acceleration here in GLD in an already sort of, extended market, if you will. Seeing a nice kind of breath of fresh air here to the upside on heavy volume, a gap and go here all the way back up to 126, the levels, the consolidation that we saw in early first quarter of 2018. So some very impressive strength here. This trend is continuing. And, it did give you that chance to get in. It did consolidate here for about 2 weeks. It pulled back, very kind of minor pullback, but it found some support at this slope of kind of trend line slope of support, and it also just mostly consolidated through time here, and now it's springboarding higher and breaking to new year-to-date highs. And silver not quite breaking to new year-to-date highs, but still a nice strong session here, getting back above 1480, heavier volume coming in, nice kind of expansion in range here, and metals just generally speaking are still hot. They're still looking good, and they're respecting their short and at this point intermediate term trends now to the upside. So silver still have a position here. We've documented this position, kind of talked about it throughout the past couple of videos. So we're still long silver here and looking for higher prices. So that is what I got. A short video today, but not a lot has gone on since our last update. So hopefully you guys are off to a good start to the week. Thanks so much as always for tuning in and listening to the videos every Tuesday, Friday. Follow us on our blog or subscribe on our YouTube channel. Keeps you up to date with all of the latest that we're publishing. Thanks so much, and talk to you in the next video update.